Good afternoon. Welcome to my market review of November 28th, 2023. First, I'll go over the markets, and then I want to show you something that I used for today to try to maybe get some clarity. And we'll get into that. We'll get into that. It's going to be really neat. It's going to be my way of adding value to this video besides just kind of showing you some consolidations, which we were expecting some kind of a directionless. No, I was expecting some kind of a not really a directionless market, but I had no bias. So kind of played out. This was one of the ideas that I was looking for. However, just because it was kind of a little bit warped and it didn't reach all the levels that I was looking for, I didn't participate. So let's take a look. Let's take a look. All right. So here we have the Dixie. Where's this open? There's it's open. Okay. So we see we got our power three. Boom, came down. Boom, right into this order block. Actually, no, that's not an order block. That is a fair value gap anchored on the daily, right? So we punched through this low. We were looking for that for a while, and we came down into this fair value gap, right? Very cool, kind of textbook. Haven't really seen a lot of textbook things like that lately. However, that's cool. That's okay. We punched down. We finally respected what the market was trying to do, or the market finally respected us, and yeah, we got that in the Dixie. Let's take a look at 50-minute. I know we were just on the 50-minute, right? Came down, drove through that fair value gap, came up, then we capitalized it for the London end. What is that London close? No, but we got a London close reversal. And this is just a full-on reversal basically on the London close. Usually we're going to see that on the 5-minute. Do we see that on the 5-minute? Not so much. Not so much. I guess here, that might have been your chance. That might have also been your chance, this one. Maybe the order block. I don't know how you're supposed to get into this. I'm not going to lie. I just have no idea. But I do know that ICT, once this time rolled over, I think he took this one short. I know he took a long. What else? I had something else to say about this. Yeah, ran out highs, took out liquidity, all this stuff. Very, very cool. Anyway, the dollar index, it had a directional day. It's been having directional day after directional day after directional day, just charging downwards. And I'm actually kind of surprised that we came down and popped out this liquidity. Maybe it'll reverse. I don't know. I don't have an opinion on that right now. All I know, the only opinion that I have right now is that the what's that word? The indices and most of the other currencies and basically everything else that we're going to be looking at, that we're going to have our eyes on, is going to be bearish. So that's the idea behind my bearish stance. If you haven't noticed by the thumbnail on my live stream, I have signaled that we are going to be bearish. So we're going to take a look at that. We're going to see that. Anyway, check our bonds. The bonds actually did something really cool. I want to show you. See that? We ran up, right? This is the coolest thing that I've seen the bonds do this whole time. I just wanted to kind of show you that. I have no comment on that. That's not honestly, it's not even particularly interesting price action. It's just the bonds are moving up in the world. They're finally doing what they're supposed to be doing, and once they break this order block high, we're going to be able to call them bullish, and I'm really excited to be able to do that because that's something that we should have been able to do already. Taking a look at the other bonds, yeah, see? There we go. Bullish. So it looks like we're trying to break out. It looks like we are trying to break out of that consolidation that everything has kind of malased itself into. So let's take a look at. Let's take a look at the crypto before we have our finale in the the equities. So the crypto, a lot of people were very excited about this because we saw this huge move up. We're expecting a bullish market, right? Remember what I said about consolidations and highs or lows lined up in the marketplace. Back here, we saw lows lined up in the marketplace, right? What do? Pop, pop, pop. We took them out, right? What do we have on the other side of the market right now? Highs lined up. So what are we going to do? Pop, 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 pop. Take them out, right? So then we hit this wall here. This one we kind of rejected off of it. I expect that rejection to be very, very strong. Now, why would I expect that? Because what we have done here is we set up a low resistance liquidity run. So in a consolidation behavior, especially when we line up highs like this, or on the other side of the market, if we line up lows like this, the market is going to want to just run those out. Okay, it's going to do it all in one go. It's going to be very, very fast relative to the rest of what it's doing. Once it stops, it typically just kind of is done. So you can see that on these, once we take out these highs, we do this little retrace. Since we've taken out all of these highs here, do we really have a reason to retrace before we pop out this high? No, we don't really have one. We should see the high run out first, and then we do our retrace if we're bullish. But since we didn't do that, since we what's that word? We encroached into this rejection block, and then we kind of rejected kind of hard. It's not too hard, but it was hard enough to drop a fair value gap, right? That's not cool. That's not something that we want to see if we're bullish. So just be advised, we still have to break structure on this to be bullish again. Let's go to Ethereum. Ethereum, we got the same story. Okay, so Ethereum, we have the same story. However, once... How should I describe this? It's much, much more bearish. Why? Because it didn't take out all these highs. Okay. We should be running these through. We should just be gunning all of these highs. We should just be taking them out, right? But we didn't do that in Ethereum. Very, very bad for the bullish idea. Okay. Solana. Once again, same problem as Ethereum. We didn't take all the highs out. So what do you think? What do you imagine my opinion might be for Bitcoin, seeing Solana and seeing Ethereum like that, especially since we should have had our raging bull. We should have had our raging bull market much earlier in the month. I'll let you think about that. So we had no raging bull market when seasonally we would have one. Okay. And now 2 out of the 3 assets are not taking out their highs. When 1 out of the 3 assets is taking out their highs and making everyone think that there's a bull market on. So what do you think I imagine is happening in Bitcoin? What do you think that my idea of Bitcoin is right now? Okay. I will tell you right now, now that I've given you some time to think, right? I will tell you that I think that we're short trapping in Bitcoin. Now, as you've seen from my live streams, I am a very, very careful decision maker in the marketplace. But yeah, that's really all I have to say about that. So I might be kind of jumping the gun, and I might be being a little bit too careful, a little bit too timid with the Bitcoins and all that stuff. But at the end of the day, I think that we're short trapping. No, I don't think we're short trapping. I think we're long trapping. We're trapping longs out on the marketplace. So that's what I think is going on in Bitcoin. I think that this fair value gap right here is going to start holding price with this order block. Possibly if they get really overzealous, this rejection block might hold price. But I actually expect the order block to do the work. And this one right here. And that's really it. That's all I got for it. So then we also did something with ETF. So let me show you the ETF trading ideas that we're throwing out in the live stream. So we got in right here off the order block. Why did we get in off the order block? Let me show you. We were not, when using this ETF chart, we were not actually using the ETF chart. Okay. What chart were we using? Let me show you. This one right here, crude oil. Okay. We come back, we take a look. What did we actually use to get in the marketplace based on this information right here in the crude oil? This right here. This is what we used. So what we did basically is we took the 1 hour chart and we corresponded some of the price action that we saw in UCO, which is the 2x leveraged ETF for crude oil, with the actual futures chart of crude oil. Okay. So if we go back and we see what we had here, we had this order block, right? So we use this order block as a discount, right? So we matched a discount in here with a discount in here, and we used when we saw that the crude oil was running for the discount, we entered a simulated long in the ETFs trading. So that's what we did. So now, what's the goal of this ETF trading? We want to do a daily range. No, we do not want to do a daily range. We actually want to do a weekly range. Why a weekly range? Why are we shooting for a weekly range? And why is the weekly range the most powerful? Why do I believe that is the biggest bang for our buck in this context? Well, because ETFs, one of the things that they do is they take commissions. The commissions, they're actually a really big haircut. It's usually like a 1 to 2%. However, it's 1 to 2%. What's the industry standard gain on a 1 day? It's like 1%. Right? So if we have an expectation of making 1% or so, if we have an expectation of making 1 or 2%, possibly 3% out of a day, that's not really worth it because the commissions are just going to wipe that out. What we have to do instead is we have to take down a weekly range. Why a weekly range, not a monthly range and not a quarterly range? It's because what we're using, the instruments that I found are the biggest bang for my buck with ETFs are leverage ETFs. Thing about leverage ETFs, they basically so as the price. Okay, so basically what you're going to notice about leveraged ETFs versus normal ETFs is that when price is moving in the direction that should bring the ETF higher, it moves slower than when it's moving counter to the direction. So that counter movement, that movement away from your position and from the direction that you're trading in, that movement actually eats away at the leverage bonus that you have, and at the bang for your buck that you get from selecting a leveraged ETF over just a normal unleveraged ETF. Now, in futures and things like that, you actually don't have that problem because the leverage is based on the banks actually increasing. Basically, they give you a fixed amount based on kind of a percentage move. Well, no, it's not a percentage move. They give you a fixed amount based on the tick move of whatever it is that you're trading. However, with the ETFs, is based on the percentage that the asset is moving. So that's what's going on, and because they, hmm, how should I put this? As the ETFs, um, as the ETF rises, you end up with a problem where it's kind of a logarithmic rise. So eventually you get to a point where it's just very difficult for the ETF to increase percentage wise. It's still moving the point wise, the points are still the same, but it's very difficult for it to move percentage wise. And as it goes down, it's much easier for it to move percentage wise. Um, don't ask me how that works. That's kind of complicated math for what we're doing right now. It's just know that when an ETF, or just know that a leveraged ETF moves down faster than it moves up when, um, and that eats your leverage away. So basically, what that means is that weekly ranges are perfect for them. It's a perfect medium between giving away profits to commissions and taking advantage of the actual leverage of it. It's so that's what we're doing in this ETF. Anyway, we got on, and we got on basically at the low because we had this order block here. This was the discount. We saw a discount in the crude oil contracts, and so we matched up the discount in our ETF with the discount in our oil. Okay. So because our ETF and our futures, they trade the same, they don't trade the same, but they basically trade in tandem. We were able to just, as it was reaching for discount, take that discount in the ETFs, and that gave us a really really nice, really beautiful entry. Okay, so was I missing anything? I was missing the indices themselves. So let's go over the indices. Let's take a look at them. Indices. Okay. ES and NQ. Both of these. All right. So what do you notice about the ES and the NQ? Both of them. We had kind of a directionless day. We took out stops to the downside and we took out stops to the upside. This is a kind of day that I don't really like. How should I put it? It is okay. It did do all of the things that it was supposed to do, but what it was doing was kind of warped. Hmm. It was kind of warped. All right. All right. We'll get into that when I show you the thing that I want to show you. Okay. And let's see the Dow. Yeah, we did basically the same thing in the Dow. We didn't reach for the lows. I do expect it to take out these lows eventually, and I do expect this to be basically the high. But yeah, that should be fine. Am I really missing anything that's important? Not really. Okay. So let's get into that thing that I was using, that method of targeting and that method of kind of appraising a chart. So we'll take a look at the ES on the 15-minute. Or actually not the 15-minute, we'll take the 5-minute chart. 5-minute chart. This is very, very important. Why is it important? Because of how they lay out the range. Okay. We're gonna take the lowest candle body of the angel range of the so this is the lowest candle close in the Asia range to the highest candle close in the Asia range. Right there. Okay. And I'm just verifying because the Asia range ends at midnight, right? Yep. So we're fine, right? When we look left, I want you to kind of take a look at the chart, kind of take in what's going on there, and kind of figure out what's. Think about it. Think about it for a second. What do you notice about these lines? Okay, so now that you've had a look, let's do the other side. And this is an especially potent tool for basically days like these, where they're kind of directionless and they're just kind of ripping left and right and left and right. And it's just very hard to appraise them and figure out what they're doing. What do you notice about that? What do you notice? So price action really, really likes these levels. And it almost seems like it basically works between these levels, which what are they? They're standard deviations taken off the Asia range. This works in anything. I'll show you soon enough, and the Dixie actually. But they're standard deviations taken off the Asia range, and why does this work? Why does this matter? It's because during this time, this is actually the Asia kill zone. That's kind of a session cross. That's when two sessions overlap, like two or three. Sometimes I think there's a time when there's four sessions overlapping. But when these sessions overlap, we get an injection of liquidity, and the higher volume, it kind of presses price up against its upper and lower limits. So we're actually able to project on that, and we're able to see where price is going to be allowed to go to. Now, these levels, they're not really effective for predicting price or figuring out what price is going to do. You already have to have an idea for well, you already have to have an idea of what you think is going to happen before you actually do this, and before you actually try to read price based on these, because it's pretty useless. It looks very, very impressive, doesn't it? It looks very cool that you can kind of pick highs and lows, and you can kind of identify fulcrum points in price based on these. The only problem is you still have to do your legwork. You still have to have your bias, and you could still get annihilated trying to use these if you don't already know what price is going to do. So let's take a look at let us take a look at our upside objectives, and I want to show you why I actually closed my charts after seeing what happened with this high. And yes, I did close my charts. I do know that I laid a passive order in here, a passive long, and that was kind of a Hail Mary type of thing, because what I was expecting was for price to reach up into this rejection block. I was expecting price to reach up into this rejection block. Let me show you what was actually happening there. So on the 15-minute chart, we can see that we have these highs. Let me reset that. There you go. We can see that we have these highs in the marketplace. One right here, one right here, one right here, and one right here. Beyond these highs, what is our PD array? This rejection block, right? So we had very, very strong price action. Very, very strong, I guess, manipulated price action, very illiquid. It was very, how should I describe it? It was kind of special. It was very stop and go. And when it was go, it was really go. And when it was stop, it was really stop, right? So it kind of ran off without notifying us. It kind of did whatever it wanted to do. But ultimately, if we stick to the kind of a 2D, kind of a chess idea, where we sort of project out price and we kind of figure out what's going to go on. We think about what we think is going to happen in price, and we pick up and we kind of find the boxes that it's supposed to check. That would make it very, very strong to expect it to reverse and do kind of different things. If we do that, then we're going to be all right. So that's really what I did. I expected price to reach up into here. This was the draw on liquidity. Why did I expect this to be the draw on liquidity? Because we were taking out highs, right? What was the last high that needed taking out? What is, well, actually, how does ICT describe an order block in his core content? No, I'm sorry. How does ICT describe a rejection block in his core content? He describes it as something like an order block, right? So this is basically an order block. This is a bearish order block that we're looking at right here. If we break this high, it's also technically a PD, but it's not a very strong one to see kind of a reversal. It's not a very strong one to see kind of a reversal idea to happen at. Right? So I expected it to run a little bit higher. Was there a PD on the hourly? Nope. Nope, no PD on the hourly, right? Definitely not one on the 4 hour. It's just gonna make it worse. So there was nothing on the 4 hour. There was nothing on the hourly. So which chart were we gonna lean on? Which chart was I leaning on? I was leaning on the 15-minute, and the only order block that was on this chart, the only type of fair value gap, the only type of anything, was this rejection block right here. How far could it have gone? Fix. There we go. How far could it have gone? Well, I expected this line right here, the 3.5 standard deviation off of the Asian range. Okay. Why? Because it was inside that rejection block. Okay. So why was I demanding the rejection block when ICT himself was not even doing that? It's because I saw that today was very heavily manipulated. I saw that it was doing a lot of chain jerking. When I first took this long, this was going to be my 1 minute. So when I first took this long, where are you? I believe it was like down here or something. Where is it? I believe it was like this one, maybe. Was it this one? I gotta check. Let me check. We are going to put on executions. There we go. Okay. It was in here. Where are you? Right there, right. So I took that long, and what I really, really wanted to see was I wanted to see it run, right? Instead, what it did was it kind of diddled. Not something I wanted to see like 20 minutes after a news release had already released. So I just cut it, and then it ran. It did exactly what I wanted it to do on the very next candle, right? So the thing that I didn't even see this run, I just kind of cut the trade and ran away. Went off to do life a little bit, so touch grass, do all that stuff. As you can see, we mitigated at the absolute worst place. So there are sentiment building ideas that they really work. They really do get people outside. Or in my case, they got me out of the trade. So as far as here is concerned, yeah, took it long on a 15-minute basis. And actually got immediately ran through in the same candle. So the question is, why did I take that long? And the answer is because we had not fulfilled this. Now, in hindsight, I actually defend that decision. I don't believe that we should have been short here. And in fact, I do believe that the long was correct. However, actually, I don't have a however. I just do believe that that long was correct, given the context that we still had not fulfilled this upper objective. So, but we did get run through. So I guess that was a plus. And we got run through right here. So it wasn't it wasn't anything crazy. It wasn't anything too bad. It was very quickly mitigated, very easily mitigated, and I'm not gonna lose sleep over that one. What I will do is um, I'll hit the London session tonight, and we're gonna deal with the London session tonight. It's gonna be really cool. Now the question is, does that standard deviation thing work in other assets? Now there's a lot of people, a lot of traders, a lot of people who are educators in this. What's the word? In this realm, in this space, who basically what they do is basically what they do. No, they believe that. Man, I can't even talk, and I'm trying to throw shade on them. So they believe that most of the concepts and most of the things that you would lean on and use basically universally, like for example this standard deviation idea, they only apply to one asset class. Now the thing is that's not true. This applies to everything, all the commodities. And if I can find the range that crypto, if I can find the range that crypto operates in, the timeline that it operates on, I'm pretty sure I could find a standard deviation that works in crypto as well. But can't quite find that. And let's find midnight. This one, right? Yep. So we have our Asia range, which is 2000 to midnight. Okay. This one. And where's midnight? Here. This one. Is that the one? Did I do that right? Do. There we go. Oh, that's a stop run, huh? Okay. So that's the problem. That's a stop run. There you go. Yeah, so you can't include stop runs in this because it's stop runs are kind of allowances outside of the tolerances. So if you include those, that's going to be a problem. So yeah, just see, notice things, right? We're noticing. Pay special attention to the bodies of these candles, especially the closes. When certain things are happening. Very, very cool, right? So this is an excellent targeting tool, and when price is being difficult and when price is having a tough time showing you something, but you have an idea. Okay, so this is a very, very important part. You have to have an idea of what you're looking for, right? So you can't just kind of like throw this projection onto the screen and expect it to help you or even tell you anything at all. Um, you have to have something that you expect it to tell you. So if, for example, for example, um, I should do a whole video on this. Is there anything in here that's going to be too, or is there anything in here that's going to be easy to explain quickly enough that we're not just going to be sitting here all night? Not really. You could just see the highs and lows form in the marketplace. So basically, until we get into it, this is going to be in the 4-hour theory video. Just if you have an idea of what you want the marketplace to do, or you have an idea of something that's going to invalidate what you want it to do, you can use these standard deviations to great effect. They can greatly increase your accuracy, and they can also inform you in ways that it's just they can inform you of a lot of things that are just very, very helpful to know about a chart. So trying to think, is there anything else? I should start. I should start taking public speaking, and I should start scripting these a little bit better, because I have a very basic script, but my mind is wandering, and I don't know. I'm very, very scatterbrained. As you've seen, very risk averse. I only take risks that I think are very, very worthwhile, and by that I mean very, very worthwhile. But at the same time, I am very scatterbrained. So thank you, thank you for your patience, and good night.